Hey guys, welcome to this video. Another one here from Will Sebastian, co-founder of the Trading Mentor, where we teach traders to hedge for income. Now I'm going to show you a clear example of the best way to do this with a high returns and relatively low risk, low drawdown setup. That's normally what we go for. Mostly we encourage our traders to just stick below a maximum drawdown threshold, which is going to vary on their skill, their equity and everything else. You need those thresholds, you need those limits within trading if you're going to keep it consistent and you're going to keep your equity growing over time. Don't forget, if you want to learn how to do that, go underneath. There's my free Discord and also the access point for our live trading room where we teach every week. Let's jump into it. So let's start out another session and go over some key lessons for this particular video. I've loaded out the euro dollar. I'm going to need to jump ahead. Now, it's 2004, I believe, at the start of this, and I know there's a financial crisis later on. So I'm going to actually just start this a little bit ahead, 2011, because that will give us a decent amount of price data so we can see really where the market sits. The goal of these videos is to get everyone to understand that stop losses are not the be-all and end-all. You don't have to have a stop loss to be profitable. You can trade without one. It does exist. As you will have seen on all of these videos on our channel, where I'm routinely filming gains on every single market cycle. Every video, no matter how bad the swing is, either way, we're ending in net gains. And as long as you can become invincible in that regard, and your net gains are over your losses or any drawdown, then you shouldn't really have an issue. So max size is going to be 0.5. I can see where the market is. It's come a little bit off the lows, most local lows. See a clear long-term uptrend after all that dollar strength financial crisis wise. So I'm short at the moment. Okay, I can play this. Let me just have a look at the speed. Yeah, I'll play it short. So I'll close that. I'm going to speed it up a bit. We can see a bit of momentum coming in the market. So I'll just take a long. Okay, anything higher, and of course I'll close it, and we should get into some hedging just as the market turns against me, which is inevitable. I always say that at some point that's going to happen, although my hit rate is very high, as you will see in each of these videos. The market will always go against me to any degree. That's never a problem. So market stretching now, you can see the former entry is a bit higher up. So I've got the means to then enter another 0.15. Okay. And we'll see where we get. I will actually just fast forward it a little bit. Okay. So push up, gains there, and I'm going to look short. Okay. And then I can plan another short a bit higher up. I would have had it about there. Okay, so let's take a light long like this. And there we are. There's some gains there. Okay, so let the market do its thing a little bit, but I will get long again. And any push up to that high, and I'm going to look to start to flip short. So take short again. And I'm just going to add a little bit more because that first position was quite light. Okay, so push down on one of them. Minor gains there. Really looking for a larger south side swing at the moment. Okay, we haven't got it just yet, but what we do have is a little bit of a higher price. So again, I'm going to add a light size or a semi-light size. $234 there. We can add a hedge. So I'm now hedging long because the market is gaining momentum to the upside. You can see we have somewhat of an uptrend arriving. Okay. It probably looks a lot more steep than that, to be honest. Something like that. But, you can see we've now traveled to the upside. So it's a good thing that I covered my risk. And since I expected markets or the market to do something like that, that's why I hedge that risk. So to be clear, instead of stopping out for a loss on these shorts, I've just taken a hedge long. They're still in play, but I haven't lost as much as the exposure would suggest on that particular move. I can now plan to add short again. Okay, so I'm going to add another one, 0.15. Okay. And anything higher, I will add one more time. Okay, we didn't get it, but we got this. Now, again, if you notice, there's a big pullback there. So I've got the means to hedge. I haven't got a lot in play to the short side. There's no massive risk. So I've just hedged 2/5 of that initial exposure. Okay. And you can see the price has fallen lower. So we didn't get gains there, but I will add again. So now I've covered more of my short side exposure. Can kill that one off. And we've collected $2,000 now. So we're still in net positive equity, which is good. And we're banking gains to use in case we do build up any drawdown, which inevitably, like I said at the start, is going to happen. Okay. So let's see what we get. A nice push down again, collecting some decent gains here. I'm just going to hedge again, hedge long, just to cover those former shorts. And I would have added on that far push. Okay. Take something there, perhaps at 0.2 in play. Take that 192 out, take a short, just to add. Take that long off because I don't need the hedge now. I've got a decent amount of equity gains. Okay, take that off, 367. Nice long side opportunity again. So you can see the market is still moving up gradually. And the shorts that I had previously are out the money, but I'm collecting profits on the way. So I could even, delete this, for example, and I'm still well up. And, I'm now more comfortable really with my position drawdown wise. So if I take a long like that, got more gains there. Take a short. In fact, I'm going to double the short because of the market trajectory forming. Just going to kill those off for 540, roughly. Take a hedge long, play. And this is really where the profits rack up because we're getting a lot of this very decent sideways movement. Okay, so can then let it fall again. 337. Take it long to hedge. We'll see where this goes. Okay, so a nice push down is going to deliver gains on that short. And it's going to allow us to, probably shouldn't have added a 0.15 to begin with, but I've left the size wrong. Nonetheless, I can close that for long side gains and I can now hedge. I'm just going to hedge 2 as well, 0.2, because it looks a bit more downside encouraged. You can see that. Great. So if you notice the pip count as well, it's very high. If you're counting the actual pips taken on every trade over this period, it's very decent. Okay, so I'm going to kill that one. And I can take a short hedge. And a short hedge again. Great. So 2 short hedges there. Okay, and I'm going to let it run long. Again. I think I'll remove that and re-hedge short, just in case we fall lower. Great. 365. Can add another long again and see where we end up here. So now we're getting a bit of a drift. Any real push to the upside and I'll take it. But we need to, there we go. That'll do. So there's $300 on the table there for that second long, trade 36. It gives me the opportunity as well to short hedge. Okay, so hedge that former long. And you'll notice as well throughout this, the drawdown really, if you look at the drift on what we've been trading, I call it the drift really, but, we sort of started around January, okay? Where are we? So our trading activity, you can actually just look at the account history, can't we? And it's just to get you to understand that even though there's a decent wide drift on this, there's where's the first trade? So 2010, okay, 2010, and that was the 31st of December. So going into the 1st of January 2011, okay. So here, more or less near where we are now, but a 128 stretch or 129, and we went to 149, and our drawdown hasn't been anything on a move like that. It's insane. And that's typical of Forex markets most of the time. Then when they do stretch, obviously you can be a lot more risk averse and careful, so you can collect more gains. And like I said before, that is going to happen. At some point, they're going to stretch more radically, and you're going to have to be able to deal with that. But nice, decent 106.312. The market is fairly sideways at this point, so I don't really want to delete that long unless we get a higher push to the upside. I can take a light short now. So there's $200 there, 1/7 of the exposure. Take a long because there's a bit of long side momentum still, and that would complete, this sort of closing in movement, if you like. So I take 92 there, and ultimately I can just close that. Okay, so net gains, nice and simple, $5,267. Low risk at all times, no problem. Lots of very quick trading there, different types of hedging. If you want to learn to do this on any asset, stay completely in control and be consistent, go under this video. We'll teach you. Talk soon.